Earnings season wraps up what is a pretty average outcome for corporate Australia. 4 super funds forced to shut down to new members after 2 years of underperformance, and one of the most admired and maligned leaders of the 20th century, Mikhail Gorbachev, dies. It's Thursday, the 1st of September 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Spring, Michael. Good morning.
I know there's a couple of reasons why today is exciting. Obviously, number one is the fact that it is spring. And the second one is that it is the first day of the Jobs and Skills Summit.
Oh, very exciting. Did you know that when I was writing the script for today's show, I tried to not mention the Jobs and Skills Summit. It was impossible. Of course, we have a story about it. But I think the next 2 days we are going to be flooded with yarns about jobs and skills and industrial relations and all things considered.
Which actually seems like the perfect segue to tell you about our interview coming up today. It almost feels like you just set me up for this one, Sean. You've got an interview today with Professor Anthony Forsyth from the College of Business and Law at RMIT University, who is one of the lucky people to receive a golden ticket to attend the summit.
Yes. In fact, he said there were 143 people going to the summit. That was the final number. Anthony is an expert in industrial relations and around workplace bargaining and enterprise agreements and all those sorts of things. So he gave us a lowdown on what he thinks will happen and should happen and what success will look like for the Jobs and Skills Summit. It's a great chat.
Yeah, if you want to get your head around kind of some of the issues that are going to be discussed over the next couple of days, it is a cracker of an interview for that. Anyway, moving on. The main story this morning, Sean, the official earnings season is over and pricing power, labour shortages and high input costs were really the key themes, weren't they, of the past month?
Yeah, I think that's right, Michael. There was plenty of good, plenty of bad, and plenty of in between, really. Perhaps the ability to pass on higher costs to consumers was among the most rewarded attribute of companies that reported. It was sort of the highlight or the standout. You might not like the fact that Qantas is charging higher airfares, but people are paying up and investors love it. So Qantas' share price is up 10% since its earnings announcement. That is a shining example of what investors were looking for. Another to fit into that category is tech giant WiseTech Global. It's up 9% over the past week or so. The counter to that are the companies that don't have pricing power, haven't been able to pass on the higher input costs to customers. Some of the US-based building companies are good examples of that. They've struggled. James Hardie fits into that category. Now, costs are playing havoc in some companies as they try and prevent a squeeze on profit margins. It's not quite havoc at Woolworths and Coles, but they're examples of price pressures hurting margins, and that's disappointed investors. Liquor retailer Endeavour Group fits into that category as well.
All right, so if you kind of look at the last month, what were some of the standout results for you?
It's hard to go past BHP and its $21 billion underlying profit and bumper dividend. Woodside is another company worth a mention. It had a cracking year due to the fact that LNG prices are sky high. And of course, it could include some of the merged BHP petroleum business in its bottom line. The coal companies did well. I don't think they'll ever have a better time. Whitehaven was probably the best of them, a profit of $2 billion after losing money last year. It's also the best turnaround story of the year, having paid back hundreds of millions of dollars in debt and finding itself with about $1 billion in the bank.
Yeah, that is a ripper of a story. I've got to ask though, Sean, any duds?
Well, it's hard to say any of them are duds. So I'm going to go via share price movements. Certainly some of the retailers, and particularly the online retailers, didn't do so well. Commonwealth Bank was the only big bank to report. Its share price has been trending down ever since it outlined its earnings results. Telstra's share price got a decent boost after its earnings report, but it's come right back over the past 10 days or so. CSL fell after its earnings announcement, only to recover somewhat. Wesfarmers has fallen since its result last week. So I wouldn't call them duds, but, you know, some of those big companies, Commonwealth Bank, Telstra, CSL, Wesfarmers, they certainly didn't shoot the lights out.
Okay, overall, what's the verdict?
Well, in terms of earnings surprises, on the upside, there were fewer than most other half years over the past decade. There wasn't a big jump in earnings upgrades. That's never good. And probably most pertinent, many CEOs were very wary of providing too much commentary about the outlook because the outlook for the economy is just so uncertain. All in all, I'm sort of happy it's over because it's a very busy time of year for a reporter, but it just wasn't a great earnings season.
Okay. So how did local markets perform then yesterday, the final day of earnings season?
The S&P ASX 200 ended the last trading day of the month down 0.2% to 6,987 points. Given the fairly weak lead-in from Wall Street, it wasn't a bad effort. The energy sector got hit pretty hard as oil and gas prices fell back. Woodside fell 4.5%, while Santos was off 1%. The materials companies also ended lower on the back of falling iron ore prices. BHP and Fortescue both lost nearly 3%. Rio was down 1%. The banks were among the best performers, with National Australia Bank up 2%. Westpac up 1.5%, and Commonwealth Bank, ANZ and Macquarie all rising around 1%. Now, plenty of results around yesterday. We'll just go through some of the ones that are worth a mention. Toll road group Atlas Arteria confirmed that Suta IFM Investors wants a board seat. It announced a trebling of its net profit. Lower production at Gold Digger St Barbara triggered a big net loss. Its share price ended the day up 0.5%, but it's really struggled. The contrast to that is Perseus Mining. That gold digger, it operates out of Côte d'Ivoire and Ghana. It delivered a record profit and bonus dividend. Another to report a loss yesterday was Biotech Mesoblast. It's in development stage, so you expect losses. But since its inception, it's lost about $1.1 billion. Mind you, investors like what they heard, and its share price jumped 9%. Cluneville Pharma closed up 16% after it released its results on Tuesday night. Webjet, the travel company, was upbeat about its prospects. Its share price jumped 8%. Then PointsBet, which we followed a lot in the last couple of years during COVID, it mostly operates out of the US. It announced a widening of losses, sending its share price down 12%, and that was the worst on the day.
And just very quickly, Sean, what about global markets?
In yesterday's report, I said oil prices are going back up. Well, today I'm just telling you they're going back down. It's a bit like a race call sometimes. For the month of August, our oil has ended lower. Also, the Aussie dollar's worth a mention. It got hit yesterday and is trading under 69 US cents.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, National Cabinet met yesterday. Some big changes announced in relation to COVID management.
Very exciting. The COVID isolation period has fallen from 7 to 5 days from the 9th of September. The paid pandemic leave, that will end on September. That's pretty much as designed. The other one I like, you don't have to wear a mask on a plane from about the middle of September either. So big news there. We knew that the COVID isolation period was going to go from 7 to 5 days. It's now confirmed, and that'll kick in, as I mentioned, on 9 September.
I think I'm one of those paranoid people, though, Sean, that I will continue to wear a mask on a plane for quite some time to come. There's something about being trapped on a little kind of tube with a whole bunch of other people breathing their air that just makes me want to wear a mask.
And that's fair enough. That's fair. I'm hopeless, though. I should be someone like that, but I'm not.
Yeah, you can leave that one to me. And it's also different as well if you're wearing glasses. I imagine that would be very, very challenging to have glasses on with a mask for that period.
Yes, I don't wear glasses, but people with glasses are forever fogging up.
Yeah, indeed. All right, moving on. It was a tough year, Sean, for the Future Fund, with total assets falling back below $200 billion thanks to falling investment markets.
For the year to end June, the Sovereign Wealth Fund posted a negative 1.2% return thanks to a 3% fall in that final quarter. Chair Peter Costello, who as Federal Treasurer set up the fund, said the result was pleasing given global stocks and bonds fell by more than 10% and Aussie shares dropped 6.5% for last financial year. By the end of June, the Future Fund was managing $194.4 billion, down about $6 billion from the previous quarter.
Okay, lots of numbers. Just getting my head around it. If the market fell by 5 to 10% last year and the Future Fund dropped by only 1%, where did it make its money?
Excellent question. Mostly by putting more money into what's known as alternative assets. It's a bit of a catch-all phrase, but basically it means away from bonds and shares. So it might be in private equity investments or hedge funds or infrastructure. Now, that's where it put its money, and those asset classes did better than bonds and shares. Hence, the Future Fund outperformed. Now, Mr. Costello said the Future Fund expects deglobalisation, geopolitical tensions, trade barriers and high inflation to be a feature of the investment climate going forward. So you can expect that the Future Fund will diversify where it puts its money. So perhaps it will put more into some of those types of assets.
Okay. Now, we mentioned earlier that it is, of course, the first day of spring, so everyone's in a pretty good mood. And it is also the first day of the Jobs and Skills Summit. It is a big test for the ability of Prime Minister Anthony Albanese to find consensus between business and unions. It's a big challenge.
Yes, it'll be fascinating to watch. He's had a pretty good start to it with the ACTU, Business Council of Australia, the small business peak body COSBOA, all talking to each other and certainly negotiating, hopefully coming up with some sort of communique at the end of it. There's more than 140 attendees now from the original number of 100. They're coming from different segments of the community. Now, many will be from the union movement, and that's triggered criticism of the summit already, particularly by the opposition leader, Peter Dutton. Though the opposition is a bit of a lone voice on this because at the moment, beginning of day one, there certainly is a lot of enthusiasm for it. Now, already some deals have been struck. We can expect those to be announced and rolled out over the next 48 hours or so.
Yeah, with something like this, it certainly makes a difference when the participants go into it with a bit more of an open mind and a willingness to actually discuss rather than just go in and being prepared to stick to their guns.
That's right. I mean, that's the exciting part of this, the potential to actually change how industrial relations and agreements are worked out in Australia is real.
Yeah, we shall watch with bated breath. Sean, retailer Harvey Norman says people are still spending money despite high interest rates and the rising cost of living.
That's the opinion of Executive Chair Gerry Harvey, who said sales in the last couple of months have been solid compared to a year ago, all COVID things considered. Now, net profit for the last financial year for Harvey Norman was down nearly 4%, thanks to COVID restrictions in the second half of 2021. The low unemployment rate and savings buffer built up during the pandemic is helping the retailer, he says. It was a fairly vanilla result, really, so I went looking for something I didn't know. Michael, here it is.
Mm-hmm. What'd you find?
Did you know Harvey Norman has 544 Australian franchisees? That's a fair bit. It also has 109 company-owned stores across New Zealand, Slovenia, Croatia, Singapore, Malaysia, Ireland, and Northern Ireland. And they generate 25% of pre-tax profit. There you go. It's also got a really big property portfolio. I knew that bit. I just didn't realise how diverse it was geographically.
It is a very interesting stat.
There you go.
Well done. Good work, Sean. The corporate watchdog has told investment brokers who offer high-risk products and services to mum and dad investors to be careful or reconsider what they're selling.
The Australian Securities and Investments Commission has put a bunch of products on a watch list, including lending for shares, crypto assets, and offers of zero or low-cost brokerage when in fact the true cost is masked. The market downturn for most of this year has triggered more high-risk products that may be unfair, inappropriate, or result in poor outcomes, according to ASIC. Commissioner Danielle Press urged retail investors to carefully consider what they're signing up for and make sure they understand the potential risks. Very good idea, Ms. Press. Very good idea.
Yeah, absolutely. We mentioned this one at the top of the show, Sean. 4 default superannuation products will be forced to close to new members after failing to hit benchmarks for the second year in a row. And combined, they managed $25 billion.
That's right. The MySuper performance test introduced by the Australian Prudential Regulation Authority last year has certainly been criticised within the financial community. It assesses default super products, they're the ones employees are put into when they don't nominate anything, against investment performance, 1, and 2, fees and costs. 2 strikes or underperformance years and you're out. Now, 5 failed this year and 4 of them failed last year as well. The biggest was the BT Super Retirement Wrap product. The good news, according to APRA, is that 96% of member accounts are now in performing MySuper products, covering more than 13 million members. And over the past year, fees for more than 5 million MySuper members have fallen. So, depending on which side of the argument you're coming from, it's a good thing, these benchmarks, though not everyone in the financial services sector agrees with that.
Sean, Taiwan wants to resurrect bilateral trade talks with Australia, saying that its growing economy is a more reliable destination for Australian products than China.
Clearly, this is a political and economic debate, and Taipei is using China's sanctions on wine, coal, beef and other local products as a starting point. Taiwanese government officials told the Financial Review they had not given up on a possible free trade deal with Australia, although their main focus was winning Canberra support to join the Trans-Pacific Partnership Regional Trade Pact.
And just quickly, the transport disruptions in Sydney show little sign of abating.
That's right. The New South Wales Rail, Tram and Bus Union State Secretary Alex Classens called on bullfed politicians sitting in their ivory towers to start catching the train. Earlier in the day, the Perrottet government threatened to tear up a wage deal over ongoing strikes that continue to cripple Sydney's transport network. Yes, the only reason I'm telling you this story is I love the fact that we could say bullfed on Fear and Greed.
That's not a word we get to use on this podcast very often, unless we use it in relation to each other.
Yeah.
which I know do reserve the right to do that at some time.
And off air, we use it fairly regularly.
Oh, that's right. Of course we do. Moving on to overseas news, Mikhail Gorbachev, the last leader of the Soviet Union who won a Nobel Peace Prize in 1990, has died.
Yes, Mr. Gorbachev was much admired outside the old USSR and much maligned inside Russia. His policies of glasnost, or openness, and perestroika, or restructuring, over his 7 years in power resulted in the collapse of the USSR into 15 separate nations. Now, Mr. Gorbachev didn't set out to break up the USSR, but it's what happened as a result of his reforms. He freed political prisoners, allowed open debate and multi-candidate elections, gave his countrymen freedom to travel, halted religious oppression, reduced nuclear arsenals, established closer ties with the West, particularly President Ronald Reagan, and did not resist the fall of the communist regimes in Eastern European satellite states. It was the end of the USSR, something current leader Vladimir Putin is determined to put back together. All sounds great from a Western point of view, but those reforms also collapsed the Soviet economy, bringing hardship for its 290 million people and indeed the return of breadlines. Mr. Gorbachev was 91 years old.
Sean, Chinese President Xi Jinping is set to become the country's longest-serving leader since Mao Zedong, with the Communist Party Congress set to reappoint him for a third 5-year term next month.
The Politburo announced the historic meeting will start on October 16, and given Mr. Xi abolished term limits on his presidency back in 2018, the party is almost certain to appoint the 69-year-old for another term. Now, Michael, I was reading a piece by Mike Smith, the AFR North Asia correspondent, yesterday. We've had him on the show. And he pointed out that all the geopolitical tensions between China and the US, which we're talking about, have been totally overshadowed internally by heat waves, drought, energy shortages, and a property crisis, exactly as it occurs in places like Australia or the US or the UK. In China, a lot of this geopolitical tension just isn't even hitting the headlines. It's kind of easy to forget that.
Yeah, they're the issues that actually really affect people's daily lives, isn't it?
That's right. They resonate.
Yeah, okay. All right, up next is the Fear and Greed Daily interview with Professor Anthony Forsyth from the College of Business and Law at RMIT University.
That's right, all about today's Jobs and Skills Summit. If you want to know what's going on, listen to the interview.
Yeah, well said. It is coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 1st of September 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.